Episode 1: Why Investing Matters, the Foundation of Wealth. Disclaimer. This content is for educational purposes only and is not financial advice. Always do your own research or consult with a licensed financial advisor before making any investment decisions. Imagine you have $10,000 sitting in a bank account earning almost nothing. Now imagine that same $10,000 growing to over $1.2 million over your lifetime, without you winning the lottery or starting the next Amazon. That's the power of investing, the difference between working for money your whole life and having your money work for you. Today we're starting at the very foundation: why investing isn't optional if you want financial freedom, security, and the ability to design your own life. 1. The harsh truth about cash. Let's start with a reality check. In the US, the average inflation rate over the past century is around 3% per year. That means something costing $100 today will cost about $181 in 20 years. At 3% inflation, your money loses half its value in about 24 years, even if it's safe in a bank account. According to the Bureau of Labor Statistics, from 2000 to 2023, prices increased over 75%, meaning $1 in 2000 buys what only 57 cents buys today. If your savings aren't outpacing inflation, you're getting poorer without even realizing it. 2. Why the wealthy get wealthier. The difference between those who struggle financially and those who build wealth isn't usually luck, it's asset ownership. Wealthy people own stocks, real estate, businesses, other appreciating assets. Middle and lower income households often only own their home, or sometimes not even that. The result? Wealth compounds for the rich while inflation erodes the cash of everyone else. Federal Reserve data. In 2022, the top 10% of US households owned 89% of all stocks. That's not an accident, it's a strategy. 3. The magic of compounding. Albert Einstein allegedly called compounding the eighth wonder of the world. Here's why. If you invest $10,000 and it grows at 7% per year, the historical average for a balanced portfolio, it will double roughly every 10 years. In 40 years, that $10,000 grows to over $150,000 without you adding another cent. If you keep adding money regularly, the effect multiplies dramatically. Example: investing $500 a month at 8% for 40 years equals $1.55 million from just $240,000 of contributions. 4. Time is your biggest advantage. The earlier you start, the less you need to contribute to reach the same goal. Start at 25, invest $500 per month at 8%, right pointing arrow $1.55 million by 65. Start at 35, same plan, right pointing arrow $682,000. Waiting 10 years cost nearly $900,000. Lesson: time in the market beats timing the market. Every year you wait, you're giving up exponential growth you can never get back. 5. Investing is a hedge against life's uncertainties. Life is unpredictable: job loss, health issues, recessions. If you have a strong investment portfolio, you have options. In a layoff, your investments can cover expenses. In retirement, they provide income so you're not relying only on Social Security. If inflation spikes, assets like stocks and real estate tend to rise over time, protecting your purchasing power. 6. The cost of doing nothing. Let's compare two people. Saver Sam keeps $10,000 in the bank for 40 years at 1% interest, right pointing arrow ends with $14,800. Investor Irene puts $10,000 in an S&P 500 index fund averaging 10%, ends with $452,000. Same starting point. One ends with lunch money, the other with life-changing wealth. 7. The wealth gap is an investing gap. The median US household net worth is about $192,000. Households that invest regularly, even modestly, almost always end up above that median. Study. Vanguard found that households investing just 10% of their income over 30 years are 3x more likely to retire comfortably than those who save but don't invest. 8. Your first step. Start now. If you remember only one thing from this episode, it's this: the best time to start investing was yesterday. The second best time is today. Actionable steps. Write down your financial goals, retirement age, income needs, lifestyle. Open a brokerage account if you don't have one. Automate a fixed monthly investment, even if it's small. Commit to never pulling out money for short-term reasons. In this series, we're going to cover exactly how to invest, what to buy, when to buy, how to manage risk, and how to stay invested for decades. But it starts here, with the understanding that investing isn't a gamble, it's a necessity. You're not just buying stocks or funds, you're buying your future freedom. At Capital Outlook 60, our mission is to help you invest smarter and build lasting wealth. Like this video, subscribe, and join us for more proven strategies and insights into the world of investing.